And that means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we get together as coaches over at Tackle Trading, talk about stocks, options, futures, Forex, economics, corporate news, economic news, even political news if it does impact the market, all kinds of different stuff out there. And we break it down for you guys as a part of our daily routine to help you run your daily routine and make more informed decisions. I got a full crew here today to break down the analysis. We've got Powell testifying in front of Congress right now, talking about COVID, responses, the CARES Act, and all kinds of other different things in terms of economic projections. Mnuchin's there as well. Crude oil inventories, some economic data. Nike, the very popular apparel maker, shoe maker, they had their earnings report in a rare mega cap stock that reports in the month of September. We'll break that down. Some other interesting news across different companies like Pinterest and Tesla's battery day did end up becoming a one-day sell the news type of event. We'll break it down. We'll analyze it all. Got a full crew here today. Matt, Noah, Mark, myself. Matt, let's start with you. How you doing, sir?
Tim, I'm doing absolutely fantastic, and I'm excited to be here with the crew today to break down the market.
Let's start with the charts, quite frankly. I mean, we're always going to go through the headlines. We're always going to give the analysis on what's happening in the news and try to give it some context. But in my personal opinion, we've been talking about this for a while. The technicals really are the story here. And Matt, obviously, we've got a little hesitation candle. You know, when we opened the cash open, it looked like the Dow was up a little bit. S&P was around the flat line, but we've been selling a little bit here intraday. Matt, what's your read on this chart right now?
I'm reading on the chart, and I'm looking forward to Noah breaking this down from a technical perspective. But my overall high-level read on this chart is kind of very similar to what we talked about last week. Now that we have a failed support pivot right there at 3,300, now you're just waiting for resistance to get broken at some point to start some type of new trend, and it's not that difficult. It really isn't. When you're looking at a marketplace that is now in a current short-term downtrend, there's not a lot of momentum behind the market right now. It's a lot of up and down, a lot of yin and yang right now.
Mm-hmm.
But when you're looking at this market right now, I'm really staring at that 50-day moving average. It's just, it visually stands out to me right now. And
Mm-hmm.
so it acted as a support level on the way up, obviously, and now it's kind of acting as a resistance level. You also have the downward moving 9 EMA right there that it's, hovering right above the price action, the high of today as well. So I'm staring at that 33.45, 33.50 level. If you can get back above that, this is going to be, you could get back into that bullish type of mentality. Obviously, coming into the market this week, we had downgraded the S&P into some degree of neutrality, given the fact that last week we saw resistance hold multiple times. We saw support getting, a little bit of pressure coming into support. So you're still looking at some type of neutral rating in the market right now, somewhere in that positive 45 level to get back to a bullish type philosophy. You got to see some type of resistance level break. Support holding at 32.50, yeah, that would be a positive first step, but that would be the only first step. Unlike last week where I'm like, okay, yeah, you can dip your toes in a little bit, with support. I don't feel that's the case. And this is just me talking my own opinion here, but I don't feel that's the case in terms of getting aggressive in the market until you see some type of resistance threshold broken. If we see that occur, we can get back to being a little bit more bullish. But right now, I think caution's the word of the day.
And obviously if we get confirmation above some kind of intraday pivot or a resistance threshold, those levels that we can identify across these indexes, that's a different storyline, but you don't have to guess on where and if you're going to have some kind of V-shaped snapback rally here. I think caution is the word of the day. I like the neutral kind of rating as well. I think that's where a lot of the coaches would be. Noah, you've got screen share here today, and I know you also do love drawing your lines and having some fun with that. So can you do a thorough technical read here? And give me the daily, the intraday, and the weekly chart on the S&P here, because I think it's important to understand all time frames.
Well, I think this is the tale of two time frames. When I was looking at the weekly charts, I had a hard time not thinking to myself, that's a pretty solid setup, as far as a pullback down into a rising 20-week moving average, big fat support resistance zone, little hammer looking candle. It kind of has all the trappings of what I would love to see in a typical market pullback. But that being said, I don't know that I have a ton of confidence in it. When I look at the daily time frame, probably the big feature on this chart that I'm really watching is just the difference between, there's a little slowing momentum, just the size of the first drop compared to the size of the second drop. You had a really, really big first drop. The second drop on the chart that we're watching right, just that little pivot to pivot drop right here, not as big, and it's got a bit of a slowing momentum pattern in general. Now it violated all those moving averages, and that's when Matt starts talking about that 50 really popping out and that falling 9. Those are really, I think, important lines in the sand. And the fact that we're seeing a little inside move here, where the price action still staying in that pattern, I think lower low, lower high. And if you break that down into the intraday time frame, you've got that support resistance right there. This is what we're really talking about. This is let me get back to a bigger time frame, like an hourly chart. Drop that back to a 1 hour time frame. And here's that support zone. You got the double bottom from back last week, Tuesday, Friday, and then, or 2 weeks ago. And then here you are bouncing your head on that again. And that's a hard barrier for it to break through, just because it established that support, not just once, twice, 3 times. It became a resistance zone out here. And so seeing the market rally up into that, I think the bulls, the buy the dippers, are probably hoping it rallies, but I just think the market's lacking a bit of confidence in the moment. And that inside, candle that you see on the daily chart there is just an expression of that. Just, hey, yeah, they started to buy the dip. They kind of bought to cover. Bears definitely buying to cover with that lower shadow, kind of hitting their profit targets. A little inside bull candle gives you a little hope. And then today it's like, I'm not so sure it can make it. Maybe. We'll see.
I do agree. The markets definitely lack confidence. There's a lot of different reasons as to why we would speculate towards that. Obviously, just weak economic data. We don't have a lot of clarity out of the charts. You got technical breakdowns. You've got all kinds of upcoming, kind of potential catalysts that could drive the market, like the political season and whatnot. Marky, what's your read on the charts here? And how are you reading this technical kind of transition we've been seeing for the last couple of weeks? You talked about this yesterday, to where this is kind of a moment of caution for you, where you're still waiting for a lot of clarity. You don't have to be the guy to ping the bottom and all that kind of stuff. How are you reading today's price action?
I mean, like we talked about yesterday, today's price action doesn't add a lot to my comments yesterday, but just to reiterate, when I have falling daily moving averages, and if you go to the NASDAQ, you see this, came up to the 9, got slapped down. There is just so many ways that this can play out. And when you get into these pockets where you don't have a lot of support and resistance, and where those resistance and support zones are battling on almost a daily basis to see where they form, there's a lot of ways they can play out. I've seen this pattern. If this was a 5-minute chart, I would be looking bullish. And it is amazing how time frame analysis, but this pattern is actually fairly common. Not necessarily on daily charts on the broad markets, right? Because there's only so many trading days in a year. But with a lack of support, I've seen this particular pattern play out a variety of ways. And so until I get that clarity on which way it's going to play out, I may dibble, I may dabble, I may do certain things. I definitely have started selling calls on all existing positions to help mitigate some downward pressure if it were to occur. But there's a lot of ways this can play out. There are times where charts are very easy to read, where the probabilities are on your side, not certainty, but probabilities are on your side. This isn't one of them. This can play out a lot of ways.
Yeah, it sure can. And that's interesting that you say that. On a 5-minute chart, you'd be looking at this a little bit differently than a daily chart. Is that just because of the current market conditions, or that you just haven't seen this enough on the daily to confirm what you've been reading?
Well, on the daily chart, once again, your risk tolerance, because that big pocket, I would look for it to get filled on the downside. Now, but my risk on the downside move here would be what, it'd be really small, maybe, just a few points. It's not, so it can be one of those trades where you make a little bit or you lose a little bit. Obviously the stakes are higher the longer the time frame you go. But there's no real tenable support there, and it's being fought for. And on these type of charts, I've seen support stick out of nowhere, right? Maybe it sticks at 32.30, and just for whatever reason, it just gets bought up there. But it is, whenever there are these great unknowns, before you do anything more than dibble and dabbling, because there are occasionally really good trade setups. I mean, Twitter was one of them this week.
Yeah, they caught an upgrade again today as well. They're up big. Go ahead.
And so I mean, there are trade setups where you can do that little nibbling here and there. But as far as the overall portfolio, it's just a time of caution.
Yeah. Well, there's a couple of thoughts I have around that general sentiment. Obviously, with the markets coming down, it could stick support at 32.35. I believe we have a step system mastermind group tonight, 8:30 p.m. Eastern. One of the most important concepts in the step system, Matt, is confirmation. Traders don't have to guess where support sticks, right? We can wait for the chart to develop. We can wait for it to kind of ping back and forth. And when we see it, when we get our rules to confirm, that's when we'll know. And just like Mark's talking about, when you catch a breakout or when you catch a support forming and actually get it to confirm, price confirmation is the key there. Then we'll know, Matt, and we'll analyze that.
Well, and I think that's very important. In terms, if you don't understand what confirmation is, definitely get into the step system mastermind tonight. And is it Noah? Noah, are you teaching?
Oh yeah, you know it.
Awesome.
We're gonna have a great time.
Awesome. And Noah is one of the finest technicians I've ever been around, so he's going to do a great job in teaching the concepts of confirmation. But when you're looking at a market right now, and I guess the word, I mean, we can talk about the uncertainty of the market. We can talk about, the mixed signals. We can talk about the Fed. We can talk about politics. We can talk about geopolitics. We can talk about economic reports. We can talk about a lot of those, but in every single scenario we can talk about as traders and investors, there's uncertainty right now, and it's a very cloudy environment. And what I mean by that is it's hard to project right now. Like, I love trading in trading environments where you can project 2, 3, 4 price movements out, where you can get a very clear picture from a multiple time frame analysis of seeing what's the day traders doing, what's the swing traders doing, what's the position traders doing, what's the investors looking at. And you can have a very clear understanding of these multiple time frames all kind of doing the same thing simultaneously. That becomes a very easy environment to trade in. Right now, from a technical perspective, you don't have that. You don't have that clear picture right now. You have daily support levels getting threatened. You have intraday support levels getting threatened. You have multiple time frame analysis where you don't have a clear picture when you're looking at the economic scenario. If anybody has listened to anything that anybody at the central bank has said, including Jay Powell this week, you understand how uncertain the economic landscape is. I mean, Mark, when was it? Just 3-4 months ago? Like, we were talking, we expect growth to come back in 2021. The labor market's going to, V-shaped recovery. I mean, it wasn't that long ago. I know time feels weird in the pandemic. It just does. But it wasn't that long ago. Just what, 3-4 months ago? It was projecting V-shaped economic recoveries in the labor market.
You're absolutely right. And it felt at the time, and we scoffed at it, that it was like this Barnum and Bailey act, center stage. Let me entertain you. Let me give you hope. Let me give you happiness. We're going to do all of these kind and put on this show, and everything's just going to be better around the corner. Well, around the corner keeps getting pushed off, doesn't it?
Well, what did it do today? What did Clarita today? Just Clarita today. We're not even thinking about. I mean, they're trying to be very clear to the market, and the market just misinterprets everything. It may be the fact that they're talking too much. That could be the problem with the Fed. You're talking too much. You're talking too much. But anyways, Clarita says, not thinking about raising rates until PC inflation gets above 2%. Guys, that's code for we're not raising rates ever. Like, literally ever. PCE report, based on how they do the PCE report, the CPI report would have to average 3% inflation for the PCE report to get above 2% on average. That's not going to happen.
And PCE
we're not
is
even
personal consumption expenditure.
Yeah, personal consumption expectation. But in terms of Clarita, not even think about raising rates. Evans reiterating policy. Rosengrid says, due to the increasing COVID infections and lack of fiscal stimulus, the recovery could be very, very slow. And so when you're talking about the hope for that V-shaped recovery, and it's just not in the cards. It's just not. We're not talking growth in 2021 right now, guys. They're now going out to 2023 right now. That's the projections. And by that 2023, they expect unemployment to get back to 4%. Okay, 4%. I got news for you guys. I've been around the market for a while. They never hit those projections, like ever. Never. They're batting zero. They should stop talking. They have a zero probability of actually meeting that because of historical probability. So in terms of this, you have uncertainty from an economic perspective. Fiscal stimulus, do you really think the Republicans and Democrats are going to get along at any
No,
point in the next 2 months?
not in the next maybe 2, 3, 4 months.
Guys,
Yeah.
we're entering into perhaps the ugliest election season we've ever seen in our lifetimes.
And Matt, you haven't been here the last couple of days, and we have missed you.
I missed
But
you
one
guys
of the
too.
things that I've talked about in the last couple of days is like, we have a technical and a sentiment battle going on at the same time, right? If sentiment wins, then support can get stuck. But like, and I've been talking about like the market and market participants need like something, a genuine catalyst, something euphoric. I mean, if you follow Davey Day Trader on Twitter, I mean, he seems frazzled these days. Like, I have no idea what's going on, so he's not going to lead the charge, right?
In
Well,
fact,
he got his first margin call a week and a half ago.
So he's like,
Congratulations,
I don't
Dave.
not just that, he's talking sports 90% of the time.
Yeah,
David
yeah.
Day
Oh, he's
Trader
back
might
to
be,
sports?
he might be moving on with his life.
He's back to sports. He's like,
And
okay,
when he
I
talks
tried this
stocks-
shtick and it did not stick, so I'm
Yeah.
out.
Yeah.
And
Okay.
when he talks stocks,
I
it's
stopped
like,
following him. So
he's like, oh yeah, I'm not a financial advisor, so maybe buy the dip. I mean, it's not this stocks ever go up, right? The sentiment's like been slapped in the face. We know a stimulus deal isn't coming soon.
listen,
So it's like, what is that spark? What is that like something that at least shifts sentiment to be like, yeah, stocks again, stocks only go up. I mean, what is it if there's no stimulus on the horizon? What is it?
Davey Day Trader, he got a tough lesson, didn't he? He got a tough lesson. When you're ripping on somebody's team and you get hate from a sports perspective, that's one thing. When you cheerlead the stock market and the stock market doesn't perform and you have thousands upon thousands upon thousands of people over leveraging themselves, it's a different emotion. I'm sure Davey Day Trader's not enjoying his DMs these last few weeks, but Mark, from an economic projection perspective, this is the most difficult moment I've ever felt personally in terms of projecting from an economic projection perspective. There is so many variables right now. And one of the biggest variables right now, if you've been listening to anything the Fed has said in recent history, not just Powell over the last few days, is fiscal stimulus. Where is it? Where is that fiscal stimulus? The market needs it. Main Street needs it. Small businesses need it. Farmers need it. Underprivileged people need it. And what are we doing? What are we doing at the government level? They're not doing anything.
They're not.
There's no scenario where they do something. It's not going to happen. They passed a clean spending bill today, extending the government to December 11th. In that spending bill, the only thing they added was, I believe Republicans got farm payments and Democrats got expanded nutrition assistance for low-income families. So it was a very clean spending bill. But anything controversial is not going to happen. So from an economic perspective, there's uncertainty. From a geopolitical perspective, there's uncertainty. And from a fundamental perspective, guess what? There's uncertainty. And ultimately, from a technical perspective right now, there's uncertainty. And so because that's why I said it's a very cloudy environment, because these uncertainties, it's hard to have the confidence necessary to say, I see this potential opportunity. I'm pushing these chips into the middle of the table in the face of everything so cloudy that you can't even see. It's hard to project what's going to happen in 4 hours from now, guys. That's hard to project. And so for me, it's very simple. And when these uncertain moments happen, and they happen all the time, this is not something new to the world. But when these moments happen, you just got to be a little patient. Let the battle take place. There will be a clear winner. And like I said last week, it didn't come to fruition. We didn't see the breakout last week. We saw resistance hold. But the same thing is this week. Wait for resistance to hold. Support holding is step one. If we can see support hold, because Noah, when you were looking at that weekly chart, That's a sexy chart. I like that time frame.
Sure, you got to be interested here. There's no
Oh,
question.
yeah.
No,
I mean,
no,
it's
no.
really attractive. Like, I mean, that
Like-
if you given no other information, no other context, no other, outside underlying concerns,
With confirmation.
that
that's
chart's
beautiful.
pretty.
Yeah.
Oh, it is. And
Yeah.
that's the chart I'm looking at, because if you do see confirmation on the weekly chart here, guys,
Mhm.
if you see confirmation, guess what you also see? You see the intraday analysis start breaking resistance. You see daily resistance levels start to get broken, and you see ultimately that 50-day moving average get broken as well. And so even though it's a scary moment because of the uncertainty, not because of the downward movement in price, guys, you got to see those things as opportunities. So it's not scary because of the market's down 7, 8, 9%. That's not scary. Let's put a stop loss on that conversation right now. What's scary is the uncertainty of the future. That is what is scary. It's not the market doing what the market did. This is a bullish retracement on the weekly chart. But if you start to see that break out and the weekly chart confirm, I think you got a good opportunity here.
Yeah, and it's amazing how all of those time frames will magically just come together if you do get that clarity, Matt, like you're talking about. Because the only way you're going to break out of that weekly chart on the candlestick and get confirmation is with the intraday breakout above resistance.
Then let me
and that
hear
kind
from all of you three on this one.
Mhm.
What price threshold would you need to see cleared from a resistance perspective for you to be like, this is now that opportunity? We're ready to rock and roll at this point.
Mhm.
Let's start with Noah.
Well, minimum of a candlestick high.
Mhm.
If you really want confirmation, you might wait all the way to 3,400.
Mhm.
But I don't know that I ever have that kind of patience. I'd want to see it at a minimum back up above that 50-period moving average at 33.50.
Mhm. I think 3,400 is the number I'm looking at. I do want ultimate confirmation. I'm going to be patient in this scenario, Matt. So give me 3,400. Give me that pivot from last week. It doesn't mean I can't dabble on individual picks between now and then, right? But for market,
I'm talking about
Yeah.
getting back to being like, hey,
yeah, no, give me
listen, we're
3,400.
starting a trend. We're rocking and rolling, because obviously there's going to be plays in the market, regardless of what
Yeah.
the market's doing,
Yeah.
right? The market's crazy train right now, and Nike just reported an amazing earnings report and just broke out of an all-time resistance level.
Mhm.
Lululemon again, the market's crazy right now, and Lululemon did what?
Started their buyback.
They started their
program.
buybacks again, right?
Yep.
The market's crazy right now, and what Twitter do?
They got an
Right?
upgrade.
There's always going to be great trades out there, both from a bullish and a bearish perspective. When we're breaking down the marketplace, we're talking about shifting overall biases in the marketplace, not a one-off trade here, not a one-off trade there.
Mhm.
Because again, even in some of the most bullish, robust market conditions, there's been great bearish setups. There's been
Mhm.
great bearish opportunities. The same thing can be said about in some of the worst markets we've ever seen. There's some really, really good bullish trades out there. So anything can happen from an individual one-off perspective. I'm talking about getting back to being into that, like what are we at in the spiders right now in the newsletter? Positive 40?
I think, yeah.
Right?
We're still on the right side of 50.
We're right side of 50, but we're positive 40, right?
Yeah.
So I'm talking about shifting that bias back into some degree of bullish mentality where you have a little bit more confidence here. I love what Noah said, the 3350 level. I think if you can reclaim 3350 on the S&P, you can get back a little bit more aggressive, maybe shift into the positive 35 level. Ultimately, if 3400 is broken, where we saw the previous pivot from last week, I think at that point you can shift back into the 30 to 25 level, maybe even into the 20 level. So I think you approach this with patience, with caution, respecting the uncertainty of the moment. Definitely respecting the uncertainty of the moment, because you know who else is respecting the uncertainty of the moment? Interactive brokers.
Mm-hmm.
They're respecting the uncertainty of the moment. Mark, what was the news that you heard from Interactive Brokers?
I got this news on a big flashing thing when I opened up my Interactive Brokers account, and it said to protect its customers. I love how they're looking after me. Interactive Brokers will increase margin requirements by as much as 35% above normal margin requirements leading up to the November election. And they're going to stagger this. And so starting on September 28th, they're going to start increasing them a little bit. all the way up to that 35% on October 23rd, which happens to coincide with the monthly options. I do appreciate that, Interactive Brokers, with all my October sold puts right now. But they're like, listen, this market could go a lot of ways. This is crazy train. We are going to reduce our own risk. They can say it's for the customers all they want. They're going to reduce their own risk by increasing margin requirements. And this could have a detrimental effect on trading all over if you are not prepared. Now, Interactive Brokers is the only one doing today, but we
know how that works though.
We live in a copycat world.
Yeah, we know how that works.
When the NFL team introduces the Wildcat, all of a sudden, lots of teams
give credit where credit's due, please. The Miami Dolphins introduced the Wildcat.
So yeah, so it is something for traders to be cognizant of that are trading regardless of the platform. There is most likely 100% guaranteed on Interactive Brokers, and most likely you are going to see margin requirements increase. And if you're over leveraged or caught unprepared, this could be a nightmare for you.
And Mark, do you remember, did IB do this in 16?
I don't know if they did or not.
I'm not sure they.
I've got an idea as to why this is happening. Noah, bring up IBKR if you can. Bring up this chart. Didn't they get stung with the oil contango?
Yeah, they got stung with oil.
They got stung. If you look at the chart back, obviously they had the drawdown back in March and April, like everybody did. But if you remember the oil stuff, I mean, they were really beaten up from that. And I think this is caution ahead of any volatility mark because they had.
I also think that. Well, I think they're respecting the uncertainty of the moment as well, right? I do believe they're doing that. And I also believe that probably in their data, they're seeing some lower dollar accounts over leveraging themselves in the last 6 months.
Sure.
And so they probably have data on their side to saying, okay, we're concerned about some of these lower dollar accounts, over leveraging themselves. We just came through, just 6 months ago where it got crazy trained there with margin. So I think they're respecting that, and I think they're seeing some things in their data that are very concerning from a new trader, lower dollar account, over leveraging, utilizing margin a little bit too aggressively there. So it's probably a wise decision from Interactive Brokers. But again, if it wasn't for the election coming up and the uncertainty surrounding the election, they probably wouldn't have that. And so again, for me, it becomes simple when you create that plan saying, okay, this is what I need. And if I don't get it, like we did last week, we need the market to break out of resistance. We didn't get it. We need the market to reclaim 33.50. If we get it, fantastic. That's step one. Support holds, intraday resistance breaks, it reclaims the moving averages. Step two would be ultimately that violation of 3,400 level. So until we see the technical charts start to get a little bit more clear to where we can start projecting a little bit more than one price movement, I think the word is going to be caution. Be cautious, be conservative, wait for that opportunity.
Why do you think? Because the mainstream media, CNBC, Jim Cramer on his show yesterday was basically saying, listen, the market is going to get monkey hammered in October. I mean, wasn't he just 2 weeks ago saying how stocks forever?
He said last week you should buy stocks. So.
This morning he said you should buy stocks.
Well, obviously.
What did I say earlier?
Yeah.
Oh, okay, Grandpa. Let's get you inside for your nap now.
That guy needs to be put out to pasture more than any analyst I've ever seen in my life. But I'm seeing like all of these. Hey, it's going to be a wild ride. It's like, the mainstream media now is turning increasingly bearish on their headlines, right? Following price action, and it's just.
Listen,
you think that has? I mean, is that going to continue to weigh on sentiment?
All you need is for CNBC to run markets in turmoil and then unleash the Kraken. CNBC might be a reverse indicator.
Lagging at least, right? I mean, they're
definitely a lagging indicator.
Yeah. I mean, I think that's partly all it is, Mark. I mean, they follow price action. They don't know how to really.
I could care less what any talking head on CNBC says about the market.
But they do weigh on sentiment. They do weigh on sentiment when it's Reuters and Bloomberg and CNBC, when they're all like, oh, there's could be a lot of volatility. Expect the market to go a lot lower in October. I mean, that can have a collective weighing on sentiment.
Yeah, but there's that old line of thinking around, be greedy when the markets are fearful and be fearful when the markets are greedy. I mean, if you let public sentiment drive your opinions, I think that's going to be a huge mistake. I think we focus on the charts. I think we focus on the data, and we focus on how to execute our trading system and not get drug into
Well,
that public conversation, quite
and
frankly.
I get it. We all love quoting Buffett, right? Everybody loves quoting Buffett.
Yeah.
It's easier said than done. Let's first start with that, right? When everybody's fearful, they're fearful for a reason. It's herd mentality. It's hard to be greedy when everybody's fearful. It's hard to buy when everybody's selling. And it's very easy for Buffett to buy when everybody's selling because he gets paid higher dividends than everybody else. So there's a little bit of a different analysis there. For me, you wait till it gets easy. Just make it simple. You wait till it gets easy again. And it gets easy when multiple time frames on the chart are all simultaneously doing the same thing. And we have not seen that yet. In this current condition, we haven't seen it, but we haven't seen it for really, I don't know, 3 weeks now. So it could be a little bit more time, guys. It's
Yeah.
okay to be patient. Some of the
Yeah.
best trades you ever make are the ones you don't pull the trigger on. It's okay to be patient.
Was there anything on the congressional testimony from Pal Matt that caught your attention?
I'll
Today?
have a full update on PAL starting tomorrow. We got 3 days of testimony here, and they said a lot of garbage. So I need to do my best garbage man approach to kind of go through all the garbage. So Rosengren had things to say, Evans had things to say, Clarita had things to say. Obviously, Pal's been on the Hill. I'll do a full update on the Fed and what has been stated this week tomorrow.
Sounds good. Let's keep working through the markets if we can here. Obviously, love the technical breakdown. Some of the individual company news that's grabbing my attention is very interesting. We'll get to that in a minute, but let's go through crude, oil, and gold. That gold chart needs examining here today. Crude light kind of just stuck here after that little bearish retracement. Noah, anything you've seen in the chart there?
I expected a little bit more downward energy out of it, but true to form, oil just wants to go sideways. It's just kind of hanging out in that same zip code around $40 a barrel. It's like a magnet.
Mark, there was data today, but I've been a complete stay away from oil for a while. Are you doing anything with oil in your approach? I mean, are you interested here at all?
I mean, my gut says the rest of the year we trade between a $10 and an $11 range. Might be between 36 and 46, 35 and 45. It just feels like it's going to be range bound for a while. So I would love it if it came down and tested those lows from a couple of weeks ago, hangs out there for a week, you get a reversal signal. That would be ideal, but you don't always get what you want. But I think you got range bound conditions for a while.
Matt, obviously we had some crude oil inventory data today. I only look at it because it's on my economic calendar. I don't usually care at all. The chart is now hesitating. The quote of the year was last week from the Saudi prince, and short sellers now are not catching the downside that you might have thought here. We're now just stuck at $40.
Well, I broke out that quote last night,
Did you?
when it was bedtime. Yeah, I did. And then, could I just stay up a little bit longer? And I was like, you do not want to test the resolve of the kingdom.
Do not test the resolve of the block.
That's
I kind of want to test the resolve, actually. I'm looking at oil right now, and obviously the last few days have been a little bit of a volatile, price action up and down, up and down, up and down. I'm looking at this from an intraday perspective, and I kind of see a little bit of a K trade scenario setting up a little bit, more so with the projection on the downside than on the upside. But I'm staring at that $39 level. And if you violate, now that you have some intraday evidence at 39, between 39 and really kind of 40 and a half there. So you're forming some type of, and if you can go down to that 30-minute chart, no, that'd be great. But if you're looking at that 30-minute chart and you're seeing it's volatile, but you're seeing a little bit of short-term neutrality between 39 and 40 and a half. And so if you hang out there another day or so, you could start to see some type of K trade scenario where you're aggressive above 40 and a half and you're aggressive underneath 39. I'm looking at that 39 level. It was an old support level on Monday as well. It was an intraday support level at 39 last Wednesday as well. And so it's tested 39 multiple different times and has held that $39 level. Now you're starting to see that volatility at the top. If you do break underneath 39, I think, Mark, you're probably going to get that 36 handle where you were talking about hanging out there between 36 and 35, consolidating a little bit. So I don't see anything like projecting. I think it's hard to project any financial instrument outside a couple days right now. But in terms of that 39, I could see an aggressive trade underneath 39 targeting those lows.
Mm-hmm. Yeah, and with that intraday confirmation, you would be getting daily confirmation around those moving averages and whatnot. I would understand it. I personally am not going to test the resolve of the kingdom. I'll find other instruments to trade, and that's not just because of what he said, by the way. I just have been staying away from crude oil myself. It's just
As
so
I said
back
last
and
week,
forth. Yeah,
they asked the entire market, "How big of a boy are you?"
yeah, they did.
What'd I say?
Well, speculators are still going to try one way or the other, but no, I don't remember what you said about it. When he said, "How big a boy are you?" What was your response, Matt?
I'm not even going to say it.
Hold my beer, watch this.
No, I said, "I'm a big boy."
Isolate that audio and pull it, please.
You said it last week too.
I love it. I need to go back and find
Who's a
that
big boy?
Who's a big boy? I'm a big boy.
Yeah, you are. You're
No,
such a big boy.
but I do. In all seriousness, though, it's a volatile ride. You probably stay away. You're probably right, Tim. It's probably a stay away.
Yeah.
But I'm looking at that 39. If 39 is broken, I do see some quick price depreciation down to test those lows.
Yeah. I want to move out of crude oil, though, because I do want to get down to gold and really talk about it. We were talking about this thing under pressure here recently, the 1900 support level that, if it does break down, you've got a little bit of a pocket here. We are seeing that breakdown developing here. Matt, what's your read on this chart right now?
The violation of support is legit. There's no doubt about that. You've had lower highs coming into it. The horizontal support level right there between 1900 and 1920 was obviously violated today. It tried to hold yesterday. It tried to hold the day before. But once you got underneath those moving averages, there really wasn't a lot of conviction on the buy side here. And, when you fought so long as a financial instrument to hold a certain level, and then all of a sudden a moving average gets beat up like it did on Monday, it's like, okay, capitulation time. And that's what you're seeing here, is a little bit of short-term capitulation. I don't think long-term investors should care one iota about this. I honestly, I don't think they should care one iota. They should not be looking at gold on daily charts. Gold is an inflationary protection mechanism. It's a safe haven asset class. And if there's one thing I know, the central bank is going to do whatever they can with every weapon in their arsenal to spark inflation. And you want to own gold over the next 5 years. So long-term investors, they're going to see this as, who cares? If it gets down to 1800, if it gets down to 1750, if you ever test that 200-day moving average here, which may or may not happen, they'll look to buy more at that point, right? So long-term investors, they're not doing anything. They're looking at that 200-day moving average. They're looking at 1800, and they're saying, if it gets to those levels, I'm dollar cost averaging. I am buying more of my position. That's what they're looking at right now. Short term, it's a stay away. Short term, it's a stay away. We analyzed gold even in the neutral charts. We analyze gold every single day. And, we talked about where that potential trigger was. We talked about that, breaking the trend line. You could dip your toe in a little bit, but ultimately you had to reclaim $2,000 and never did that. So there was never really a logical, technical reason to add to the position. So long term, not even caring. Short term, if you missed out on gold in the recent couple of years in the rally we've seen, then you're really approaching it the same way the investors are. It's a stay away for short term. It's a stay away for long term, because you don't short gold. That's not what you don't want to be the dude in the room that plays the don't pass line. You don't want to do that. Mark, who's that guy in craps? Are you the guy in craps that plays the don't pass line?
Dude, I am always the bull. I'm always the house.
You're always the house.
Listen, and I love craps. Like one day, my first choice of dying is surrounded by loved ones. My second choice of dying is, rolling dice on a hot table. And I hate that guy who just is that guy. And he usually sits in the corner of the craps table and is putting his bet against the roller bets out. You don't want to be that guy. That guy.
So The guy that plays the
That guy
don't pass it
sucks.
craps is the guy that shorts gold.
That guy
You,
sucks.
you don't want to be that guy. Okay. That's not who you want to be in your life, to be the anti-gold guy. But so I don't see a short because I will never see a short on gold. I'm completely biased about it, and I fully admit that. You're looking at this the same way though. You're looking at this to see, okay, does support at 1800 hold? There's nothing to see here, even if you reclaim 1900. There's nothing to see here from the top side. You got to be looking at the bottom side here. You got to look at those support levels. Where's that support bounce? Where can it occur? And get prepared to buy that when it occurs. So when I'm looking at this right now, you certainly got to see downward movement in price in gold. And so 1800, you still got a ways to go. You're 68 points above that level. 1800 was an old resistance level, old support level during the consolidation phase in July. It certainly could test 1800. It's a nice little significant whole number as well. It's right above the consolidation range we saw in April, May, and June of this year as well. So you got to be looking at 1800. Ultimately, though, you're also looking at that 200-day moving average. If you guys remember the last time we did this on gold, when we right during the pandemic, where all of us were like, why is gold going down? Why is gold going down? And what did I say? I said everything goes down in these types of movements. Initially, everything goes down. It's because when you spark the fear goes, and then you get capitulation. The capitulation leads to margin calls, and margin calls lead to, reducing exposure in positive assets to pay down negative assets. And so that's what we saw occur in March of this year. You're probably seeing a little bit of that occur right now as well in gold. And so in the short term, I expect gold to continue to come down. You're seeing volume support the breakdown, which leads to a probability analysis of lower prices here on gold as well. And so short term, you're a stay away. You're looking for a support bounce here. In the market, I'm looking for support bounce to give that first indication that, okay, we're getting ready to go. But ultimately in the market, I'm looking for a resistance breakout. I'm looking at that 50-day moving average. I'm looking at 3,400 on the S&P 500. In gold, I am looking at support here. I need to see support hold here, both from an intraday and a daily perspective. And then we can start talking about that as a buying opportunity, because even if you reclaim 1900 here, you're underneath the 50-day moving average. You're underneath the 9 EMA. You're underneath the 20-day moving average at that point. Even if you reclaim 1940, which is right in those pockets of moving averages, you have overhead resistance at 1980. You have overhead resistance at 2000. So even if you break out of resistance, there's too much chop above those resistance levels to give any type of further price appreciation projection. That's why you're looking at support here on gold. Let's see it find support. It's a stay away in the short term. We're looking at this more from a long-term perspective at this point. Let's stay away. Let's not be adding to positions yet. Let's wait till we see some type of support hold here.
These 3 down days, Matt, are happening as the dollar is rallying and breaking out. I mean, that's the old analysis, obviously, but you also have some risk off sentiment. You got the technicals here developing. Out of all the things that are happening, I mean, what's most important? The chart for you? Is it inverse relationships? I mean, is it just the mood of the market? What is most important for you?
The market is completely, is it confused, the word about the Fed? Are they just new to the Fed? But they are completely misgauging the Fed here in the last week and a half, last 2 weeks. And I've seen this in the data over the last 3 weeks. And that's why the Fed keeps coming out and reiterating what they've been saying. Charles Evans literally gave a speech earlier this week on Monday, and the market sold aggressively on his statement, right? Guys, he didn't say anything that wasn't in the policy statement from last week. He didn't say one thing. And Charles Evans today felt like he needed to come out to the market and say, guys, listen, all I was doing was just reiterating what we said last week. I wasn't adding anything new. Nothing new was I adding. There was not one new part of the analysis that I was adding. That was Charles Evans today, trying to just reiterate and clarify comments, because the market is just craving so much more monetary stimulus that they're hyper analyzing everything the Fed does right now. Like Jay Powell gets in a New York elevator and coughs too much. They're over. Well, I guess we would all hyperanalyze somebody coughing in a New York elevator right now. But you get my point. We're hyperanalyzing the central bank right now and everything they do. Whereas, guys, think about what they've said. We're not raising rates till a minimum of 2023. We are not going to do anything until we spark inflation above 2% in the PCE report. There's never been a more dovish environment in our history than right now at the central bank level. So again, I'll have a full update on the central bank, but what's important for me right now in gold in the marketplace, it's not what any politician says. It's not what any central bank says, a central banker says. It's not what Wall Street says. None of us should care one iota about what anybody says in the market right now. It is a visual representation of price and how the market interprets what everybody is saying. And right now, the market is saying we are confused. And until we see until we see the market more clear, less cloudy, you got to be cautious right now.
It's almost been a couple months since that big parabolic run up in gold. And obviously, I mean, we did want some price consolidation and whatnot. I do love the analysis. Long-term thinkers are not going to change their approach to gold here. I don't care what happens, quite frankly. But we're going to need support. Yeah.
With what the Fed is doing,
yeah.
No, long-term investors, they could care less. They could care less.
Yep, I agree. Dollar, by the way, is catching that breakout here, Noah. If you'll take a peek at UUP or the $ DXY, either one that you can bring up. And Matt, obviously volume on the ETF, that's not reflected in the Forex markets today, actually, but we have seen the reversal in trend here. You got to catch an upgrade here, maybe even move it on the right side of 50 and into some slight bullishness.
You'd be positive on the dollar.
Would you be bullish?
Yeah, you would be bullish on the dollar right now. You have a inverted head and shoulders type technical pattern on the daily chart. You had a clear area of resistance on the neckline that was horizontal being broken. You reclaimed all of your moving averages, and now you're starting to see a little bit of momentum on the top side. So absolutely, you would be bullish on the dollar right now.
Yeah, and it has taken some time for that chart to develop, but obviously it is catching a little bit of a bid here and looking okay to me.
Keep an eye on that 200 weekly. Keep an eye on that 200 weekly. It certainly can play a role there. But from a daily perspective, you should see a little bit of price appreciation here.
Nothing going on with Bitcoin today. Let's move into individual companies here if we can. And let's start with Nike. I don't see any other stock that we should start with today besides one of the big ones that actually reported earnings, had a really great quarter, and the price response, Matt, is actually gapping out and running. What did you learn from the Nike earnings report?
I learned that they love digital. That's what I learned.
They did that last quarter too. I mean,
they did it last quarter too, but last quarter it was kind of the, oh my goodness, did you see Nike's digital sales? That is amazing. Oh my goodness, can that be a trend here? It's a trend. And it's not only a trend, it's here to stay. Nike came out and said, hey, listen, digital is part of our future. We're going to focus on it. Digital sales went up 82%, 82% year over year, guys. That's on the back of close to triple digit digital growth in last quarter too. So Nike was very, very impressive with their digital growth, which is obviously so vitally important in post-COVID type economic conversations. From a numbers perspective specifically, Nike comes in with a juggernaut EPS number, guy, just an absolute juggernaut EPS number. Came in at 95 cents a share versus the expectation of 48. Now, you'll hear us say this multiple times in the upcoming earnings season. Guys, earnings projections are not the same in this year as they normally are, but that doesn't matter. We all know the projections have been lowered and it's easier to cross the bar. We all get it. We all understand it. Still, a 95 cent versus an expectation of 48 cents is a very, very, very good number from an earnings per share perspective. Revenue also came in top and bottom line, beat at 10.6 billion versus the 9.1 billion expectation. Revenue year over year basically stagnant, minus 0.6% in year over year growth, but they also increased guidance. So guys, stop me if you've heard this one before. Beat EPS, beat guidance, beat on revenue, triple whammy. Wonderful, wonderful report. You could not have asked for a better report in this condition with a traditional retail stock like Nike quickly adapting to the online model, seeing digital growth in the last 6 months. Very, very, very impressive. You got to love what you saw in Nike's report today.
Yeah, and obviously the gap and run there, Noah. I was not intending for any kind of pun or joke. I know that you can't. Nobody can ever get a pun past you, though. So even the unintentional ones, you're going to catch. Matt, the digital stuff. I was thinking about this myself. I would absolutely buy a pair of Nikes online. You remember when we were kids, you had to go try on the shoes, right? But their consistency in modeling and branding, and people are going to go online and buy the shoes. That huge growth. This is now 2 quarters in a row. The trend is there. The numbers are good. The year-over-year revenue doesn't concern me much. We're talking about 2020, where we've had a pandemic and all kinds of problems. I think it was the triple whammy. I like this breakout. How would you label that?
Nike's also not a growth stock too, though.
Right.
I mean, if you, even in a pandemic, if you had year-over-year growth at 0% and you were a growth stock, that would be very, very concerning. Nike's not exactly a growth stock, so I'm not as concerned. I'm actually very impressed with them maintaining growth in this environment. Now, obviously, we can throw cold water. Well, consumers were given this and corporations were given that and blah blah blah. But still, I mean, you got to be impressed with a company, a traditional retail company, seeing the digital strength that they've had in the last 6 months. And I think you're seeing this a little bit with a lot of other companies who had those traditional brick and mortar stores be like, hey guys, we can maintain revenue without, we can think about it like this. We can maintain revenue, increase earnings per share, not due to increasing revenue, but due to decreasing cost, decreasing labor costs, decreasing G&A costs, decreasing, location costs, decreasing all these other ways. And Nike comes out and says, yeah, wow, revenue up 15%. That was fantastic against the expectation. Beautiful expectation beat there. But a 15% increase in revenue expectation versus a 100% beat on EPS numbers. I mean, Nike's got something to focus on here. It's again, there's not a lot of shade you can throw on this report. It was a really good report out of Nike.
And one of the reasons why the Dow actually had a little bit of relative strength here today against some of the other components, and whatnot. Noah, how do you read the gap here? Is there anything that you would be watching for here from this point? Just time, let it develop, let the chart develop. What's your read on this?
Well, it's an interesting gap. As far as the size of the gap, the amount of the gap, I'm not sure how that compared to the expected market makers move.
It was higher.
It was higher. That's kind of what I would have expected. So you got a pretty good pop. And what I would be watching for is just the top and the bottom of the gap. Like at this point in time, it's just coming down off the highs. Anytime I see a stock like this on a gapping situation, looking at that overnight action's pretty interesting. It's kind of crazy how that whipsaws. But just looking at
back on that for a second. Those whipsaws, when you see them, usually are predetermined price transactions at 117.5. You see the tails?
Like big institutions moving blocks. I mean, that's just boom, 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 and that's all overnight. After hours trading. Right. When you are as a trader, like I always get that question, like how do you manage after hours trading? And my typical answer is you don't. You try to avoid that because you get pretty wide spreads. I mean, those are 12-point whipsaws where price action's getting filled all up and down, and that's how you have to fill a big block order. Is it you can't really just fill it at one price. It gets filled at a cost average of all those prices. So at this point in time, it's just, hey, where's the high for the day? Where's the low for the day? And just keeping an eye on those new lines in the sand. And anytime I get a gapping stock, if it takes out the high, you can expect it to continue to run in that direction for a little bit. And if it starts to take out that new, first established low, you might expect it's going to fill the gap. It'd be hard not to want to spike the football on that as a short-term trader and take the money and run.
Well, yeah, and probably just read it bar by bar. If it starts coming back, you'll treat it as a gap fill. And if it runs, you could do a momentum play. But I don't think there's anything here today from that perspective. Give it some time to cook. Great earnings report. Yep. Matt, the next one that I had down, KB Home. We had a couple of other earnings stocks I did want to get to. KBH. Let's stick to earnings for a sec. Then we'll get to Tesla and Johnson & Johnson and the others here in a bit. Home builders, obviously, they've been hot. We've been talking about it. We analyzed Lennar earnings last week as well. What did you learn from KBH?
KB Homes comes in at 83 cents a share versus the expectation of 50 cents. So a real good beat on EPS numbers. They also came in above revenue at 999 million versus 895 million. Revenue did decrease year over year at 13.9%. So a little concern. EPS numbers was really good. Revenue numbers was pretty good. But revenue numbers year over year did decrease 13.9%, which is kind of a decrease. Obviously, throw a little cold water on the positive EPS numbers, but they also caught a downgrade here. And so it wasn't just the earnings numbers. The earnings numbers overall were lukewarm. I would say on average a little bit better than neutral, but they did catch a downgrade. And you're fighting to break out of a very, very important resistance level. I don't mind the lack of gap here. I don't. I actually would really like KB Homes consolidating a little bit, getting some acting a little defensive right there underneath that $40 level. If you can hang out there for a little bit, you might have a nice little breakout of $40 here.
Yeah, and you've got some of that developing across the sectors as well. I mean, obviously, home builders, they're going to trade together. They obviously always do. I'm seeing potential breakouts, Matt, across a lot of these guys, so I'm kind of interested in home builders right now. Even look at the XHB there, Noah, if you can, just the ETF. Because we had Lennar on the option report over the weekend, I believe, and you're seeing strength. I'm interested in some of these names.
The longer the home builders can trade in a consolidation pattern, right? Think CrowdStrike and Twitter for last week. The longer home builders can trade in a consolidation pattern with downward top market pressure, all it takes then is for the market to go neutral or even a little bullish, and you could have a really nice setup here.
Well, look at Lennar. My favorite one is LEN from the report. Sorry, Matt.
Yeah.
Good. And daily chart on that one, if you can, Noah. Just a nice, clear breakout zone at that 80 level. The longer something does track neutral, like you're talking about, Mark, when you do catch price confirmation, which is a concept we brought up earlier in the show, Matt, so important to get price confirmation. I like some of these setups here, and KB Home did not take me off at all.
KB Homes above 40, Lennar above 80, and XHB above 55. This isn't hard. These ones aren't hard. Yeah. There are some very, very difficult things in the market, but looking at a breakout on Lennar is not one of those. A close above 80, trigger above the high. That's a pretty simple trade.
Yep. Next one I do want to bring up here, just while we're on earnings, is Aurora Cannabis. And, Mark, I don't know if you remember the comment or the question we had about ACB last week from one of the investors and traders out there. Yeah. And Noah, zoom in on that. It's kind of hard to even see it without, zooming in on it. Just obviously a very big downtrend, a pummel here today. It's down 26% today.
And you got to love that fake out, that people buying into the earnings.
Why would anybody do that?
Yeah.
I don't.
But it
understand.
ran. It was
I know,
huge yesterday.
Mark, it wasn't just a price movement. Look at the volume.
That was massive buying coming into earnings.
You're talking 30 million shares against an average of 4 million yesterday.
Nope, and they it didn't work out. That smells very amateur to me, to be honest.
Guys, this company lost $3.3 billion in Canadian dollars, which is about 290.
Oh, so not real dollars.
No, okay. Canadian dollars, which are close to US dollars. They do still spend there, Matty. No question.
I wish Greg was here right now.
The old money homes would have something to say about that, I'm sure.
I would be like, Shroot bucks? What's the ratio of Shroot bucks to Canadian dollars?
Oh, Dwight Schrute, one of the greatest characters of all time. Guys, this company consistently losing money because of branding, because of pricing structures, Matt. They tried to go into higher end product and pricing and whatnot. It did not stick. It did not work. The company, in fact, I saw one analyst basically say they've missed every financial target they've ever set. Why do we listen to them? Literally direct.
Sounds like the Fed's economic projections.
I think the only lesson here for me is a reminder from the conversation last week, guys. I mean, speculation on a downtrend into earnings can be tough. It is just such a wild crapshoot, and it is not usually a high probability setup. Stock getting pummeled, but it's been getting pummeled all year. It's a company losing money, So
well, it's always a difficult conversation when you get those types of questions. I mean, every trader has been faced with that, and we kind of danced around it a little bit initially, but I came in and I said something, and I wanted to be clear, but I wanted to also be respectful of the situation. And I said, you're not going to make your money back. The last remaining analysis you have is hope. That is the last remaining analysis is hope. And when the last remaining analysis is, I hope to make the money back I lost, you should get out and look and go on vacation, recharge the batteries, do something else, get back to who you are as a trader. Believe me, I've had to do that many, many times in my life. Get back to who I am after I started acting badly. And sometimes you just have to have those difficult conversations as investors and traders. And this was one of those last week that we had to have. And you know, I don't regret what I said, and I'll say it again next time if I see somebody doing the same things. You can't base your financial future on, I hope something's going to improve in the future. That can't be it. You can't say, I hope that the trend of the past is just going to reverse. It's a trend for a reason. And so, and nobody wants to learn those tough lessons. Nobody does. I don't, you don't, nobody does, but they're lessons. And the lesson is very simple. What was the investment thesis in the first place? What was the investment thesis in the first place? And if you can't lay that out logically from a numbers perspective, you shouldn't be investing in the company. And you should never, ever, ever hope to make money back on a lost trade or a lost investment. And when the last remaining analysis is, I hope to make the money back I lost, you need to get out of the transaction because you have no probability edge.
Yeah. Tough day for ACB. No
tough day for ACB,
it.
no doubt.
25% down.
Tough day.
So what you're saying,
no,
Matt,
it's not a tough day. It's been a tough 3 years.
Yeah.
Well, isn't that go through like the cycles of grief? Like you finally get down to acceptance. Like you
No, I don't
denial,
think most people accept it. I think most people will make excuses and say, "Oh, this is the market screwing me over," or this is just a bunch of degenerate gamblers," or they use anything they can to take the responsibility off themselves and put it on some type of unknown factor, some type of tinfoil hat type analysis, so that they can feel better about themselves and sleep fine at night. When the reality is, it is up to us, the individual. You know, Tim, we talked about this on the podcast this week when we were talking about retirement models. And what did I say? I said, listen, I get it. Everything is bonus column, but it is up to the individual to plan on retirement. If people trust government or if people trust corporations, there's a rich history of them not paying on retirement. It is up to the individual. When you make a decision to invest in a company, that's your money. You need to protect it. You need to grow it. It's not up to anybody else.
Individual accountability and responsibility. I thoroughly enjoyed that podcast, by the way. I agree with it. Agree with that sentiment 100%. And if you've not yet listened to that podcast, go listen to it this week because we're going to be doing the future of retirement next week. And I think if you have listened to this first one, it will set that conversation up very, very well. Let's move on from ACB.
I will tell you, T, real quick. I'm not an investor in ACB and I don't invest in any marijuana company, but I was cheering yesterday, and I don't know, I can't even remember who the individual was, so I apologize if you're listening. But I was cheering. I was like, I hope he made the right decision, but if he didn't, my God, give him something.
Yeah.
But
well, there's a little one-day
doesn't
pop.
happen.
Who knows? Yeah, who knows? But again, individual accountability and all those kind of things is really, I mean, that's the truth about trading and life and investing. No question.
Now that we're post earnings, though, I do have a question for you guys, because just from a charting perspective, 530 is the low price here on ACB. You've had some, I mean, it's wicked volatile, and the weekly chart doesn't respect the wicked volatility from a visual perspective, but it's wicked volatile over the course of the last year. But you do have slowing momentum in that longer term trends, and you do have a low price of 530. Do you have any interest? I'm going to ask the bottom feeder, eats higher prices, loves the low price, Mark Justice. Mark, do you have any interest?
When I bottom feed, there has to be a pathway to profitability. One of the reasons I have a hard time selling naked puts, even on companies like Lyft, is that I do not see a pathway to profitability. And so like I love bottom feeding, and sometimes you can get like really good, in my opinion, deals because I like the fundamentals. They make money. They even make money today, and they're at really lower prices. But I have to see a pathway to profitability, and I don't see one. And so without that, you know, ability, well, eventually what happens if you can never make money? Well, the Grim Reaper comes calling on your company eventually.
Well,
Doesn't
and
mean I'm
you,
right.
you had
right?
me at path to profitability. That's where you had me. You had me at hello. Um, there's no path to profitability on this company.
Mhm.
I mean, and that's the problem. It's the same problem I have with Lyft. It's the same reason that Tesla, when it was hitting, what, 150 bucks, not almost close to a year ago, right? You know, there was worried about a pathway to profitability. And so, I mean, you got to make money eventually. I mean, or else you eventually run out. And so, not one here with this company, in my opinion.
Do you think, Mark, because you and I we've joked about this and we've criticized this in the past, but do you think the market is getting sick and tired of the further projections from a profitability or economic perspective? Do you think they're just getting old hat here?
I think it was one thing, like when we were coming off the COVID situation and there's no visibility, right? We didn't have any visibility in April and May.
Go back to the market real quick, Noah, if you don't mind.
Yeah, like so we didn't have any visibility at all into what the future held. And during that time period, the powers that be said, hey, in 2021, we should buy stocks today because in 2021 or 2022, things are going to get better, even though we didn't have visibility. Well, the concept of being able to buy, you know, that concept resonated. Like, yeah, things are going to be, and the stocks are about the future and all of that, and it got the train rolling, and then all kinds of things would happen over the next few months, and then euphoria, how everything was just easy, and smash the buy button and stonks never go down, and all of that stuff got the sentiment train rolling. Well, fast forward to today, and all of a sudden it's amazing, right? You have a few weeks down, and then all of a sudden people are like, do I want to buy today based on 2023 prices, or 2022, or at some point in the future? And I think that is definitely contributing to a wearing on sentiment. Absolutely 100%. Because like the closer we get to the end of the year and that 2021, and certain companies make money today, right? So it's Home Depot smashing earnings, Target smashing earnings, Nike coming in smashing earnings. So there are companies based on today's numbers that are doing really well and making money. And so there is less tolerance for companies that aren't. Because when certain companies, you don't have to look at 2021 or 2022, you can base it on projections today. It definitely, individual companies that aren't in that boat, I think you're returning to a level of normalcy on some level.
Well, and that the reason I ask is because it's been relatively short term where we've been hearing the 2023 projections, correct?
No, what was that again?
It's only been
That's a new
relatively
development.
short term that we've seen this new development of the 2023 projections from the Fed. Before that,
yes.
it was all 2021. Like if you'll remember, just kind of quick history of the last 6 months, initially it was on the back half of 2020, right? That was the initial thing when we saw the spark in March was, oh, we're doing this today because we're going to be recovered by the
because
back half
things are going to be better in the future. That concept maintains. It's just, what is that date in the future?
No, and that's my point, because over time we've seen this constantly get rolled out further and further and further, and we haven't seen any revenue growth, guys. We've seen price growth. We haven't seen revenue growth. We haven't seen revenue growth since like what, 2017, 2018 maybe?
No,
right?
And that's the thing. And like we talked about Nike earlier. I mean, in a normal situation, I would have been scathing. I didn't contribute that you had, all-time high and your revenue growth year over year is down. Now, so even Nike is getting a pass on that right now. Apple services revenues didn't grow. Apple's getting a pass on that. So companies are still getting passes on numbers.
Well, and there's always going to be certain companies that do, but my point, my larger point is this, is that over the course of the last 6 months, you've seen this constant push out further profitability argument. We're going to get back up and running by the back half of 2020. We're going to get back up and running by the first quarter, second quarter of 2021. We're going to get back up and running by the end of 2021. We expect inflationary growth and labor market numbers in the first quarter of 2022. It's only been the last 3 weeks where where the Fed and Wall Street has started to shift the conversation to 2023, right? That's only been just in the last 2 to 3 weeks and really solidified with the Fed's monetary policy statement from last week. So it's this 2023 projection from an economic perspective in inflation, in inflationary numbers, PMI numbers, manufacturing data, overall just interest rate policy in general, labor market numbers, from corporate projections. We're now starting to talk about 2023. Well, it's a little bit easier to justify the risk with the hypothetical recovery 3-6 months from now versus now looking at this saying, okay, in 36 months from now, you got to pay the price today and expect us to get back up and running 3 years from now. That's a different hurdle to overcome in the marketplace when you're talking about high valuation. And what I have seen, I want to get your guys' take on this. What I've seen from Wall Street over the course of the last couple of weeks is I'm seeing increasing analysis from the analysts out there saying it's harder to justify, and they say it in their own words, obviously, but it's harder to justify those buy rankings based on the current price versus now the projection. So for me, if the economic recovery scenario was, okay, we're going to get back. I mean, I laughed at it, but guys, it was 3 months ago. They were talking about the labor market completely recovering. It was just a month ago where Baghdad Bob was saying the labor market's going to be recovered by the end of this year. It was just a month ago.
In the last 24 hours, Larry Kudlow said, we don't need any stimulus to achieve a V-shaped recovery. I mean, first of all, that is not mathematically possible in the short term. I mean, it's not even a debatable fact. If you don't get additional stimulus, this is not V-shaped. I don't know where it goes, but it is this constant lies that they say, that it's just, and I think it sucks a lot of people in.
And I think I've been fairly clear on my economic projections that the V-shaped recovery was just never in the cards. From day one, I've held that opinion. It was never in the cards. Baghdad Bob saying that they don't need stimulus to get a short-term economic recovery, that might be one of the most insane things, the most crazy train things I've ever heard in my life.
It goes against literally every major analyst that does it on the macro level at Morgan Stanley, Goldman Sachs, and rattle off the rest of them, and every Fed person.
Listen, the farmer in Emory County, Utah could understand that one, okay? It's not in the cards. I don't even know what Baghdad Bob is even talking about any longer. But again, coming back to Wall Street, if you remove the political propaganda from it, and that's what those economic projections are, they're political propaganda. But if you remove that from the equation, again, just looking at the central bank and their economic projections, not the politicians, because obviously they speak their book, but from a central bank, they're the ones that have been constantly shifting out the projections to 2021, 2022, and now 2023. And what Wall Street is saying now is basically this, guys, if you're projecting a recovery by 2023 and you're asking us to pay the current price from a fundamental perspective for growth in 2023, wow. But also think about it like this. Everything the Fed has done in the last 6 months, all the stimuluses, all the job saving bond programs the Fed is projecting, and I hope you caught the sarcasm there, but everything the Fed has done, and yet they're talking about a recovery by 2023. That's how dire it is economically. That's how terrible the economy is, that you're at zero interest rate policy. You've increased the balance sheet by over $3 trillion. You're begging like a homeless guy on the street from the fiscal government to please, 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 pretty please do something from a fiscal perspective, or this house of cards is burning down. And if all our rosy projections come true by 2023, if we get stability in the election, if we get stability from a COVID, if the vaccine works out, if, and there's about 50 different ifs that have to come in line to meet those 2023 projections, it is a lot more difficult for a Wall Street analyst to come out in that environment where they expect zero growth in the next 3 years in a historically dovish monetary situation, dealing with an unprecedented healthcare crisis, to say, I'm willing to pay perhaps the second highest price in human history in that environment. That's a different argument if your economic projections are 2021.
No,
but now we're talking 3 years.
And make no mistake, and this is the thing many new investors make the mistake at, is price cheaper than it was 3 weeks ago? Yes. That doesn't mean
it isn't
cheap. That doesn't mean valuations are still not astronomical. It doesn't mean that we still have bubble-like conditions across the market. This thing is still just because price is cheap doesn't mean it's cheap. And that's a really hard concept for new investors to handle. I mean, just think about the NASDAQ bubble in 2000. Price came down, right? Doesn't mean it was cheaper. Didn't mean it wasn't still in a bubble. I mean, one of the things, and I'm still a buyer at lower levels from an investing standpoint, because I do believe a vaccine comes. I do believe a fiscal policy passes, but things are pretty pricey still. And, and so they
and I'm not trying to fearmonger in any capacity. I'm trying to paint in the picture of why there's uncertainty right now.
Mm-hmm.
There is obviously understandable uncertainty right now. And until that picture gets a little bit more clear from a political, economic, monetary, and fiscal policy perspective, it's going to be a little bit more difficult in the market right now. I said it last week, the easy money was made. Now the hard money's being fought for. Wait till
and I like that saying, because it is. The easy money was made, hard money fought for. And it's a precarious environment. I mean, it is going to be fascinating. I mean, once again, I love this market. It is so interesting to me this year. And, it's one of those things, and Tyler talked about this a lot yesterday, of having exposure and not panicking with your positions, but still having powder in the keg in case we got a real big sell-off, and then you got a real buyable bottom at some point, and having powder in the keg to take advantage of that without panicking. And it's a fine balancing act, isn't it? It is a fine balancing act.
Things will get easy again. They always do. They always do. That's why you don't want to lose your money in this environment when they get easy again. Wait till it gets easy again. It's like we gave the analogy of card counting, Mark, right? When you don't have an edge, you bet small.
Mm-hmm.
You lower your position size. When you have the edge from a probability, you increase position size. Right now, there's not an edge to be had. It's uncertain. Wait for the time frames to align. And it starts with support holding, followed by a resistance breakout on an intraday perspective, reclaiming those daily moving averages, and ultimately getting back above 3,400. That's the plan as of now. Now, if support gets violated, you update it. That's what you do. You update it. But that's the plan you got to be moving forward with right now, is be cautious, be patient, wait for support to truly hold. And support only truly holds after you get a follow through on a resistance break.
Mm-hmm. It's amazing how we don't really, accept the idea of 2023 earnings for the broad markets. But for some of these growth companies, they could tell us they might not make money for years, and yet we'll get behind that. But I'm with you. Go ahead, Mark.
Yeah,
Technically,
but
we're
they
breaking.
haven't. They burn fast though.
They do. They
Hey,
can
no, could
burn.
you pull up like a
Yeah.
15-minute chart or 5-minute chart or something, couple days? I'm just curious for my own, because you're breaking intraday lows right now. And I was just looking at that next support level that formed yesterday. Where was that at?
3260.
3260. So breaking through right now on intraday chart, but looks like you have another test coming up real quick at 3260.
Mm-hmm.
All right. Okay.
Man, I got to start talking more bullish. I got to help.
Yeah, you
the
started,
market.
you broke out the bear,
I broke out
and
Matt the
market's
Bear.
like,
Matt the Bear. That's right.
Oh,
Well, we'll see.
That's not bullish, not Barry. He's an analyst.
We'll see if we can find one of these companies that you might be bullish on. It's hard to be bullish on the broad markets right now when it's moving more into a neutral range, waiting on support. I think the technical analysis today has been spot on, boys. And it's obviously the thing we've got to keep tracking in the short term. Let's keep talking companies, though. Mark, a quick one for you. Johnson & Johnson, actually another company to announce that they're moving into a phase 3 clinical trial. 60,000 people. They did even make a specific note. They're going to have a lot of people in this trial over the age of 60 as well. They didn't say how many, but they said a significant number. Marky, anything here? I mean, the
no,
market's
we don't give
not reacting to it.
we don't give updates on vaccines every day, but I follow. I mean, there are there are multiple dozens of vaccines making really nice progress around the world. This is the 4th vaccine in the U.S. to enter a phase 3. Eventually, one of these is going to stick, right? You don't know which one. You don't know when that will occur, but they are making progress there. I mean, the science is just a slow process, and anything, whether it is a medical device or whether it is a generic drug or whether it is a vaccine, there is a process to go through. And many of these vaccines are slowly advancing through the different phases. Eventually, we will have a vaccine. And Johnson & Johnson, just more news that, collectively as a whole, because that's how I see the vaccine, is just this big, huge push by some of the brightest minds around the world and countries around the world. Collectively, we keep making more and more progress on that front.
The market doesn't seem to care. Quite frankly, I kind of check out of these ones, Matt.
I don't care.
And obviously, we all want a vaccine. We like hearing it from a human interest story. We want to see that thing developing. We believe eventually it will happen. I like hearing these headlines and all that kind of stuff. From a market perspective, though, it doesn't seem to be moving the needle much.
Oh, it has become more of a real life story than it has become a market story, right?
Yeah.
The market has built into their projections a vaccine at some point in 2021.
Mm-hmm. Yeah. Yeah. Next one.
Vaccines. When's the last time you saw vaccines move the market, guys?
It's been a bit.
They can move little pockets in the market, but not.
No,
It's been a long time. Yeah. It's
too many variables to make that announcement.
Yep. Tesla here next, TSLA, if we can. And obviously we talked about the sell the news, reality of the situation, Mark, yesterday when we were breaking it down in the halftime report, and they had their big battery day. And obviously they came out, there's a lot of anticipation. It was later in the day. So you saw the price action. We've now not only started to break down here, that is a pretty bearish signal there for at least a 1-day technical read, down 8%, below the pivot, below the moving average. Several things that Elon Musk had to say about this. Number one, quote, "We will not reach serious high volume production until 2022. Okay. These battery ideas, they want to get vertical integration in their company, Mark, where they got the mining contracts, they build the batteries, they build the cars, all that kind of stuff. And the eventual goal here is by doing all that, they're going to have a 1,000,000-mile battery. And that is that you can continue to charge and charge and charge, get 1,000,000 miles out of it, Matt. And they even did announce they were trying to get down to a $25,000 car, but all of the announcements, all of the blustering, it's like, well, yeah, but this is all way down the road. And investors didn't like hearing that. They didn't like hearing that it was going to be all the way out in 2022, 2023, 2, 3, 4 years down the road. Marky, I mean, what's your reaction here? This was an obvious buy the rumors, sell the news kind of an event. It has played itself out that way. What was your read on this Tesla situation?
I don't know. You want to have someone more positive speak on the subject.
Well, I don't think investors really hated it, by the way. People who love Tesla, we're not going to read anything into the report and hear one bad thing.
Listen, I am not a fan of Elon Musk. I am not a fan of the way they portray their products. I'm an electric vehicle fan. In fact, I just saw news literally coming over the wire that California is planning on banning gas cars by 2035. That's literally just breaking that I'm seeing over the wire in the last couple minutes. So, I mean, obviously the electric vehicle push is real. I mean, if gas cars are banned in one of the biggest economies in the world, I mean, there is a real thing. I think all of us, like, that's the future, right? I mean, electric vehicles are the future. Tesla's position. I just don't like all of the BS that comes out of Elon with, earlier this year, hey, battery day is going to be amazing. It's going to blow your mind. And then, of course, pull back expectations. It's just so much Barnum and Bailey, Richard Gere in the movie Chicago, doing his little song and dance before the jury. Let me like flash you with the left and take you from the right. And I don't like that, because I don't have this clear vision of how sustainable their profitability and all of this, because they are always setting expectations and then pulling them back, and they never really get punished for it. So like, it's one of those things. Electric vehicles are the future. Tesla is likely to be a major player in that. But as far as the innovation and the greatness of the thing, I thought it was far short, and I thought it was far more show than it was any actual deliverance on anything.
Well, and the market obviously is responding to that, down like 8%. And we're treating it like a news event day, but Tesla volatility has just been crazy, obviously, for a very long time. Still up over 400% year to date. Noah, with that breakdown below that little pivot moving average, I mean, is there anything here in this chart that's grabbing your attention?
Not particularly. I don't see a support zone, and I see just downward momentum. This is kind of a big pocket. I might back it out to a chart where I've got more moving averages on it. Whoops. Which chart am I after right here? There's that pocket between here and the 50. That's probably the first logical place I would see anybody, even the algos have the wherewithal to try to step up and buy that. In the meantime, that's a falling knife, and we know what we say about falling knives.
Don't catch them. Yeah.
Don't catch them.
Yep. Yeah.
But if you did, that would be a really great trick.
If you could catch falling knives. Now we've got a Barnum and Bailey reference, falling knife, trick at the circus reference. I got it. I mean, appropriate for analysis when we're talking Tesla, I guess. It has been a circus show here for a long time. Matt, long-term investors are not going to come off of Tesla. I mean, people who are fanboys of Tesla.
They're up 400% this year. They're up like 1 billion% in the last 5 years. No, they're not going to care.
Yeah.
The only thing they cared about today was, again, the exact same thing I've been talking about today. They expected the announcements of the 1 million mile battery, whenever they get it, fine, they'll celebrate that. The announcements of a $25,000 car that is more affordable for Main Street America and people around the world, obviously a positive thing. But it wasn't their announcements that really caught the investors' attention here. It was the timeline. Once again, talking about, and you said 2022, Tim. No, it's 2023.
No, that's a nice bring around to that concept, Matt. That's right. A nice bring around.
Because again, it's projecting out, and I'm not a hater of Elon. I actually really like Elon Musk and like what he represents. I don't agree with everything he does, and I wish he wasn't so vocal. But you can't just discount the things you dislike when you really do like somebody like that. And I do like Elon Musk, but how many times have we seen Elon Musk put out a projection that didn't come to fruition?
No, all the time.
All the time.
We're going to hit this number of production accounts.
We're going to be delivered this many vehicles at this point. It never happens.
Yeah.
And so you come into battery day and you expect some pomp and circumstance, and you expect some cheerleading, and you expect the wine and the champagne, the bottles popping and all that. You expect that out of Tesla and whatnot. You expect the amazing announcements. Hey, we're going to get a $25,000 vehicle. We're going to get a 1 million mile battery. We're going to do this and we're going to do that. We're going to go to Mars, and after we go to Mars, we're going to Jupiter. You expect all of that, right? What you don't expect is saying, but we're not going to be doing it for 3 years. It's tough to justify a growth company that doesn't have growth for 3 years. That's tough. It's tough to buy the second most overvalued market in the world when the projections are If we're right, it's going to be 3 years. If we're right, it's going to be 3 years. The market's used to, hey, in 6 months, we're going to be doing this because nobody remembers what they said 3 months ago. Like little squirrels chasing nuts. They don't remember. They don't remember what the Fed was talking about 3 months ago or what this politician was talking about 4 months ago. It's about what for me right now. So if Elon would have came out, and I'm glad he did. I'm glad he put out the projection because I think it's an honest projection. But if Elon would have came out and said, hey, we're going to have a 1,000,000-mile battery by next year, people like me would have said, you are batshit crazy. No way. Not going to happen. And you know what? It wouldn't happen. But guess what the market would have done?
They would have rallied on it.
The market would have rallied on the hope. The market would have rallied. Oh, they're going to have it in 6 months. And then in 6 months from now, when they don't hit it, it's like, oh, well, what does Elon have to say now? So it has nothing to do with the announcement of the batteries or the car or anything else they announced. Everything was a positive. It's just that 2023 timeline. That's a problem. It's a problem for the market, guys. It is. And before this craziness of the Fed in the last 6 months, guys, when the Fed would come out and say, come out and give their projections, the market would move on that. They would move on those types of projections. Now the market's like, okay, whatever.
Yeah.
You're talking about now, the Fed is talking about low interest for 3 years, and they're acting like, and everybody just in 6 months is acting like, oh, that's a positive thing for the stock market. What does that mean? What does that mean? It means the economy is going to be shit for 3 years, guys. That's what that means. If the economy was rocking and rolling and doing great, you wouldn't be begging for fiscal stimulus and you wouldn't be begging for lower interest rates, and the market wouldn't be craving negative interest rates. If the Fed was confident, they would keep short-term projections on economic recovery, and they wouldn't be talking about sticking zero interest rates for the next 3 years. If Tesla was confident in their growth, they wouldn't be projecting 3 years from now. What's happening right now is the market is waking up out of this slumber and saying, whoa, whoa, whoa. We thought things were going to be good in 2021. That's what you told us. That's what you said. And now we're just 6 months later talking about how the economy is not going to be good until 2023. And I got to justify a Shiller P ratio at 30 for hypothetical 3-year growth. The Fed is signaling weakness.
No, and you're starting to see some of this trickle down in analysts. Now, one of the things that you see in analysts is they're normally, these sell-side analysts are always jacking stuff up, and everything's going to be a billion. I mean, it's a comical game that they play. But UBS analyst David Voigt came out and downgraded Apple from buy to neutral, not saying, hey, go sell Apple, it's going to, no, but he just, saying neutral, saying that it's valuation. And it's amazing how in uptrends, nobody ever talks valuations, but when things start trickling down, all of a sudden everybody starts talking about them. Just said their valuation reflects a growth trajectory that is currently unsustainable. And so it's not, and so basically what he is saying is he's saying it's not that Apple's bad. He's not saying go sell Apple. He's not saying
Apple's not bad. Apple's a great stock.
He's just saying that the valuation right now points to, listen, we're getting way ahead of ourselves is all.
Well, Mark, think about it. A lot of these projections at the Wall Street level, a lot of that is based on economic projections. It's based on monetary policy. It's based on fiscal policy. There's a lot that goes into those types of projections. But when the central bank did not give us a 3-year target, but we were all working under the assumption that the economy was going to, V-shape or U-shape or whatever the shape is, but we were going to see projections and we were going to see growth in 2021. It's so much easier to have a buy rating on Apple, despite the 28 PE ratio, which is extremely high for Apple. It's extremely high for Apple. It's easier to put that projection as a buy when you expect this short-term economic pain to subside by 2021. It is you have to update your projections at the Wall Street level once the central bank starts shifting out the time frame further and further and further out from an economic recovery perspective as well as a growth perspective. And so you're going to be seeing this over the next few weeks, guys. More and more Wall Street analysts lowering rankings on companies you would not think they would be lowering rankings on, and not because anything fundamentally changed in the company, not because anything changed in the technical setup, not because anything changed in the underlying fundamentals of the industry or the sector or the broad market as a whole, but simply because we're not talking about a recovery by 2021 any longer. We're now talking about a recovery by 2023. You have to update your projections at that point. And so, you know, Apple getting downgraded today, American Express got downgraded today at Bank of America as well. And both of them cited the same type of causation, whereas with the growth now expected by this date, we can't justify the fundamental price any longer. We can justify the fundamental price if we were economically recovering by the back half of 2021. But now you're talking about 2023, and we're in the back half of 6 months where you guys have been furthering out your projections. And finally, the central bank comes out and says, nope, gloves off, we're going home for 3 years. Are you kidding me, central bank? Way to give the confidence to the market last week. Good job, J-Pal, saying hands off, we're going to do nothing. We're going to keep our salary, but we're literally not going to do our jobs for the next 3 years. It's simply harder to project at that point. You got to downgrade stocks in that environment. You have to.
Mm-hmm. Well, I think you can even downgrade just based on the charts. I mean, Noah, you brought up the Apple chart here.
But that's fine, Tim. But again, the analyst isn't downgrading based on the chart.
I understand. I'm just looking at it myself. I'm like, that's not a good look. And as we're selling here intraday, I'm looking across many of the major plays. And Matt, these daily charts, until we get price confirmation on these indexes, you know, with the backdrop of the sentiment shift, Mark, that you're talking about with analysts, with the backdrop of the analysis of Matt of pushing out PE ratio projections all the way out to 2023, and you just have this feeling in the market. Until we get clarity on these charts, I think caution, the word that you guys have been using all day long has been caution, wait for price confirmation. Those are really the messages here today. Don't you think, guys?
Oh, absolutely. You know, listen, I'm not a shorter in any situation except for day trading. It's just not who I am. You know, and I am a long-term bull. It is not a question of do I think that stocks 5, 10, 15, 20 years from now. And I really like the theme that Matt's developed for the show. You know, Apple right now, for example, is at 108. At some point in the future, is it going to be back to 115, 120? Sure, absolutely. Apple's a great company. Stocks grow. We know that from the market. But I don't know if that's going to happen 2 years from now, 2 weeks from now, 10 years from now, right? And so you have to take into account short-term technical conditions to help guide your decision. You have to take into account the big picture of things on valuations when you're looking at your investments, and have those two different hats. You know, it's a really volatile market right now, and we don't know how this is going to play out in the short term. You know, everything we've been saying all week, and this theme of Matt in the future, and I really like it. It's given me stuff to think about for my own personal trading and investing. Is trading, we wait for confirmation. We look at our charts. I still think even in these downward conditions, there certainly are bear trades. Bear trades are doing great this week, right? But there are spots to take. Home builders setting up on that thing, Twitter and CrowdStrike. Like, it's just picking your spots, being careful when you do, while you wait for broader confirmation on the whole index, and know that this can go a lot of different ways in the couple weeks. I don't know what that sentiment thing that is going to get the market excited again. I mean, Matt, we joked yesterday, you know how we've been talking about causation for a couple of weeks. Yeah. Yesterday we joked that the best they could come up with yesterday on why stocks were up were market rallying off lows from yesterday, trying to rebound. They couldn't come up with anything, right? They couldn't say, like they totally punted on why, just they're rallying. Oh, thanks for the headline.
It's a battery day miracle.
Yeah, I mean, so but eventually a spark will come. It will create that. Hopefully it creates a bottom. I don't know what it is. And so I'm going to be careful until I see either technical confirmation or see a genuine sentiment event. And hopefully I get both.
Guys, the simple reality is the Fed's a leader in all of this. And a lot of Wall Street projections, a lot of corporations projections are based on Fed projections. They're based on the St. Louis Fed. They're based on the Dallas Fed. They're based on the Chicago Fed. They're based on Fed projections. There's a reason Elon said 2023, guys.
Mm-hmm.
There's a reason for that.
Mm-hmm.
And that reason was very clear. The Fed did. And so everybody's updating their projections. And the simple reality is when you're updating your economic projections from a growth perspective or an economic recovery perspective, however you personally want to categorize it, when you're updating your projections and you're pushing out profitability further into the future, it's hard to justify current price when the probability shifts. It just is. And you have to update those. I expect to see more downgrades in the future.
Yeah, and it's just like, I mean, like right now while we were talking, I rolled one put that was going to expire in October. I rolled it down and out to a lower price in December. So I'm trying to do things me personally where I'm not panicking, right? On this, but I'm also trying to be a defensive. And like I said, I've sold calls on everything I own right now, because I think the conditions warrant it. And so there's ways and experiences and things you can do to be defensive without panicking. And we Tyler talked a lot about this yesterday. And so, yeah.
You only panic when you don't have a plan, though. That's when you panic, when something unexpected happens and you don't know how to handle that unexpected occurrence. And so, for example, I do expect personally some decreases in price here. I do. I expect some more decreases in price in gold, and I expect more decreases in price in the market at this point. I think that's the most likely scenario. Now, obviously, anything can occur, right? Noah correctly identified slowing momentum in chart earlier today. Anything can occur, but I personally expect you need to have a plan for lower prices.
Mm-hmm.
And on those retirement accounts, like I talked about last week, you need to own some insurance. However you want to categorize that, if that's adding a couple bearish trades, if that's buying put option on the S&P 500, whatever it is, you got to have a plan for lower prices. But you also have to have a plan for when to re-engage with the market on the top side too.
Mm-hmm.
And because the market is primarily bullish over time, right? 80% of the time the market's bullish. So you got to have that plan. And so the plan, very simple. You don't care about upward movements in price until 33.50 is reclaimed. You care less. Under the current support level, you do not care about upward movements in price until 33.20 by 33.50 is currently violated. 33.45, 33.50 is right where that daily 50-day moving average is. So you don't care what happens from a short-term trader perspective. Now, obviously, day traders are going to trade their trend. Day traders are shorting the market right now. I'm not talking to day traders. Day traders, they'll short, they'll buy, they flip-flop like politicians. But I'm talking to the swing traders out there. To the swing traders, you don't care on the top side until 33.45 is reclaimed at a minimum. You don't care. Price can do whatever it wants. Okay. Now, if the market goes down to 3,200, we might have to update those resistance levels. No doubt about it. Okay, things have to be updated, but as of right now, that's what I'm working towards. If 3,400 is ever reclaimed in the next few weeks, I think at that point you can get a little bit more aggressively bullish in the short term, right? Everything that I talked about today was I wanted to make sure that our team is prepared for these projections because you're going to see more downgrades, in my opinion. When the Fed does what they're doing, Wall Street follows that. You're going to see more projections to the downside. So to the top side, let's wait for resistance to get beat up first.
Mm-hmm.
Let's wait to see it with our eyes, resistance getting violated. On the downside, those long-term retirement accounts should be protected right now.
Well, and as we sell from the cash open and as charts on the intraday are starting to weaken, as you're talking about retirement account protection, it does allow me to kind of set up a very, very simple kind of, pitch here for our webinar tonight. One thing we are going to be doing tonight, Matt, at 7 o'clock and talk about perfect timing based on the conversation. Coach Tyler Craig will be talking about put options, the power of put options, how
Yeah.
we use put options, the value of using protected put options. So guys, if you're interested in learning about a product that can help you navigate conditions like this, join us at 7 o'clock Eastern Standard Time tonight. I think it's a perfect conversation
Well,
to be having today.
and the primary purpose of put options is insurance.
That's right.
That is the
That's why they were created.
primary purpose of why put options were created. It was an insurance product. And so the algorithm of the Black-Scholes model, it's evolved into this financial assets algorithm, no doubt about it. But part of it was just trying to price in insurance and these other products that are based off something else, right? So in terms of this, or an underlying asset class. So in terms of this, put options were created as an insurance product. Investors have been using put options for 40 years now to protect against downside risk. And again, nobody knows what's going to happen in the future. The market could snap back, but right now, based on what we're seeing, you should own insurance.
Yeah, I agree with that. Hedged, and we've been talking about that actually for a couple of weeks now, as things have kind of been shaking out throughout
When
the month of
easy money's
September.
to be made and there's no hurricane out there, you don't need insurance.
Right.
But when you see a Category 4 hurricane off the coast of Florida, I'm willing to bet you want to have insurance.
That's right. That's right. Any other notes you guys had, Mark? You want to make sure that we
Listen, we have our daily Nicola news, right?
Oh,
do we have to?
Listen, I don't make the headlines. I don't make the headlines, right? I got two notes. One, Nicola, Wall Street Journal reports that the company's talks with several potential energy industry partners have stalled.
What does that mean? Come on, what's that mean?
That means that Nicola's down 19% on the
That
news.
means the energy company's like, I don't want to touch Nicola right now.
So Nicola down 19% on the news, down to $23.
Oh man, violating the 200-day moving average as well.
Yeah, no, so nasty situation on Nicola. And then the only other note that was not covered was Waste Management was downgraded to underweight. And once again, I'm starting to see, we got the one on Apple. I see this on Waste Management. These, all of a sudden, analysts starting to shift their downgrades, downgrading stuff. And I haven't seen a lot of downgrades in the last 3 months. Starting to see downgrades. Waste Management.
Again, you're going to see more of them because 3 months ago, everybody was working to 2021 recovery. Now everybody's working to a 2023 recovery.
So, yeah. And
I got a couple very quickly. We already talked about Apple, but Apple launches their first Indian online store. I'm very interested in India and companies like Google, Microsoft, obviously Apple. Think about this for Apple, for example, and how important India could be to Apple. They launched their first online store in India where the article I read was 99% of cell phones are Android in India. That's a big market for Apple. A big market for Apple. Now, obviously, that's more long-term, not short-term. But keep an eye on Apple with what they're doing with India. Amazon. Did you guys see the story on Amazon? No, if you can go to Amazon real quick.
I didn't see any notes on Amazon, Matt. No.
Oh, Amazon. It's not necessarily Amazon. There was a company that put out the Prime bike.
We covered this yesterday, and the headlines yesterday. The headlines yesterday were it was an Amazon spot product.
Yeah, well, yeah,
that's not true, is it?
How they market it. They didn't market it like that, but they tried to. We've seen this in the stock.
It's actually not an Amazon bike. It is another company.
Amazon bike.
Another company calling it the Prime bike, piggybacking
the Prime bike for $495.
So yeah, no, it's
I'm willing to bet Peloton called Amazon the very second they saw that on Amazon, and Amazon's like, wait a second, we don't have a Prime bike. And then Amazon's like, What if we did have a prime bite though?
Right. That's a good
Yeah.
idea. Let's make one for
Yeah,
ourselves. Yeah.
thanks for the idea, guys.
Yeah.
I just thought that was interesting. But the news is Amazon announced their Prime Day, October 13th. So
Mhm.
October 13th is Amazon Prime Day. We talked about Nike, ACB, Lulu. Let's take a look at Lulu very quickly. In a world where stock buybacks are few and far between right now, Lulu announces they are bringing back their stock buyback program. So keep an eye on Lulu very quickly. Just wanted to update that. And then American Express got downgraded at Bank of America.
You know, and there's a bunch of stuff I actually would love to go to, but there's breaking news here in the last hour I did want to bring up, and I do not, you know, I don't know exactly, Matt, what you're going to have to say, but I think I have a pretty good idea. JP Morgan, if you can hear Noah. JP Morgan just announced they are going to pay $1 billion fine to resolve U.S. investigation into trading practices, including admitting their fraud and that they're wrongdoing through spoofing, through algorithmic trading, through the use of margin. They're paying $1 billion. This is dating back. This investigation has been going on for a long time. Stock is down a little bit here on the news, Matt, but they're going to have to come out and
Where's
say,
the
okay,
criminal investigation?
we'll see.
Where's the criminal investigation?
None of this stops in our society, and these banks are evil, and they do not have your best interest at heart, and they do not manage your money. Matt, when you went over the hedge funds on the podcast, and if you haven't listened to the podcast yet, you need to go listen to it. Matt breaks down all kinds of stuff on retirement and hedge funds. Until people actually go to jail and not pay fines, America is this corrupt place in our banking system. It just is.
Breaking news. Alabama fines themselves for recruiting violations.
Yeah, seriously, right? Yeah.
Like, come on. Like, listen, banks play by a different, this is completely wrong in our society and needs to be fixed. Banks play by a different set of rules than individuals do.
Mhm.
There was one individual running one algorithm in 2010 that sparked a sell-off in the market based on spoofing. And guess what that individual did? He didn't get a fine, Mark.
He went to jail.
He went to jail.
Sure did. Yeah.
He went to jail for running spoofing. Spoofing is
No.
illegal.
He didn't go to jail just for the spoofing. He went to jail because Goldman Sachs charged him with stealing their algorithm, Matt. It was the bank trying to protect their IP from that guy.
No, that's a different story.
Are you talking? Oh, okay.
That's 2011.
The 2011
Hey, man,
one.
if you want to
That's
get all
a
your
different
banking
story.
criminality stories,
Yeah,
I mean, there's
you
a
need to
lot
get
of
your
it's easy.
criminalities.
It's easy to
straight
mix
there.
them up, right?
Okay,
You
no,
know?
I get
How
it.
much
It's
time you
very,
got?
very difficult there. But spoofing is illegal, guys. Spoofing, and there's a reason. It's not just JP Morgan. Goldman Sachs is even worse than JP Morgan at this, in my opinion.
Mm-hmm.
But they have these algorithms that will put an order into the market. The market maker will come down because all this is algorithm done. They'll put an order in just a fraction of a percent underneath a spot price. Algorithm comes down, the market maker comes down to try to fill that. They pull the order and it drives the market down and it hits stop losses and comes down, down, down. That is JP Morgan literally admitting to ripping everybody off that's in a trade on JP Morgan.
That's right.
That's what's happening. That is market manipulation. It is illegal. And JP Morgan should not pay a fine. There should be people in jail for that. Okay. We send, what's the woman's name? The insider trading.
Martha Stewart.
Martha Stewart.
Yeah.
We send Martha Stewart to jail for 3.5 years for closing a transaction. She got a tip from somebody inside the company. Okay. We sent her to jail for 3.5 years. JP Morgan pays a fine of $1 billion. Guys, how much money do you think they made off spoofing?
Yeah.
Billions.
How many, think about it
Billions
for a
and
second.
billions.
One of the biggest concerns that we've had with all of these banks over the last year is that how are they going to make money in this environment?
Mhm.
Well, guys, you're seeing how they're making money in this environment. What did we say about Goldman Sachs? Their last earnings report, the last two of their earnings reports, robust earnings report, but not based on anything other than their trading. Guys,
Mhm.
their trading isn't based on the same stuff you and I do. They spoof the market. They manipulate the market. It's wrong. It's criminal. People should go to jail. There should be a federal investigation on this. They should not. Jamie Dimon, you can get up there and you can talk about how awesome you are and how good you do for society. You paid $1 billion fine. JP Morgan pays $1 billion fine for spoofing the market. I'm willing to bet they made $10 billion spoofing the market. Just off the top of my head.
I would put that over under, and I would take the over. I would.
How many times have you guys heard me say, I will never, ever, ever buy a bank?
Well, JP Morgan's been on your top of there with Deutsche Bank and Goldman Sachs. I mean, out of those three, I don't know.
Oh, they fight for the king of the hill, the most hated company all the time. It's currently subsides in Deutsche Bank, but Goldman and JP Morgan are fighting really hard. It's wrong. It needs to be called out. Main Street media, Wall Street media, financial news media. You should nail Jamie Dimon over this. You should literally do whatever you can. You put all the heat on him. Listen,
that is not
we
his
don't even
perception
know.
of it. He is the prince of Wall Street.
No, he isn't.
But that's the perception from the media.
Jay Powell is the prince of Wall Street. Okay, don't get me started on that. But okay, how do they get a pass here in this environment, guys? In an environment where Main Street Americans are struggling at a level that we have never seen in our lifetime. In an environment where the central bank has to increase the balance sheet by $3 trillion, and most of Americans are struggling with just paying monthly bills. And JP Morgan just gets to pay a fine of $1 billion for cheating people out of their money. It's wrong.
It is wrong.
It's morally wrong. It's ethically wrong. It's criminally wrong.
Speaking of ethically and criminally wrong companies that have been bad citizens, Boeing's threatening to break multi-month support level here.
Boeing.
And you've started to see a lot of this support levels across markets and some of these things. And could you bring up Boeing there?
Yeah, my keyboard stuck. There you go.
You know, so I mean, some of these support levels, and a lot of these companies have been trading in this like really boring pattern, right? Just, I mean, you see a lot of insurance companies like this. You see a lot, you know, Boeing's been trading in this, you know, testing some multi-month lows here. So, I mean, a lot of stocks, it's just not the market itself, right? A lot of stocks are, have some real key technical levels that they are just fighting tooth and nail to try to hold.
Yeah, short-term 150 is pretty important there for
I'm not done.
Yeah, I know you.
JP Morgan got $25 billion in 08 and 09. They've spent over $50 billion in stock buyback programs over the last 10 years. They got another bailout of billions of dollars earlier this year, and they still feel the need. Every central bank policy is dominated towards JP Morgan, Goldman Sachs, Wells Fargo, Citibank, Bank of America, and yet they still felt the need to illegally manipulate the market by spoofing it. We as a society cannot allow that to exist. We as a society, as Main Street Americans, we can't see that as okay. That can't be normal practice moving forward, that these banks can simply pay a fine when they illegally manipulate a free marketplace.
And I
it's
can't
wrong,
think of
and there needs to be criminal investigations, and they need to go to jail.
Feels like a bipartisan issue too.
It is never going to change if you allow them to pay fines. It's never going to change because they make more money on the illegal behavior than they do on the payment on the fines. It's never going to change. You got to create a precedent here. You cheat the market, you go to jail. You spoof the market, you're done. Not only do you go to jail, you can't trade for the rest of your life. Put the hammer down. Bring the hammer of justice down on these individuals. And I'm not talking about some, you know, entry-level dude that you're just going to use as a scapegoat. You go after the big dogs. The buck stops here. Jamie Dimon has to answer these questions. Give me 5 more seconds. I won't be done again.
Well, no, listen. I knew this one was going to grab you. I waited to the end of the show for a reason. This is a serious issue. We've been talking about it for a very long time.
Just wrong.
Quite frankly, for 15 years, we've been talking about it, Matt. The manipulation of Wall Street, the development of these practices is not. It's not hidden anymore. We know about it. We know that they've been doing this for a very long time. And this is not a bipartisan issue. This is not about, well, let's let the bankers go out and try to grow the economy. None of that garbage. This is fraud. This is wrong. This is absolutely unethical. And they have to start doing something stronger about it. That is absolutely true.
Listen, how many billions of dollars are JP Morgan traders going to get paid in bonuses this year?
They've had their best, dude. Their
10,
their
20
earnings
billion?
have been strong.
Yeah.
They've been killing it. Yeah.
Yeah. Based on what? Spoofing? Really?
Mm-hmm.
Come on.
Yeah. All right.
Society cannot allow that to exist.
I agree. And even, I mean, this is from a story like a month ago with the Goldman Sachs settling that thing with Malaysia over $4 billion in fraud. These things come up all the time. And people like us that are around the markets for a long time, guys, we're aware of this, and it's just disgusting. It just really is. It's just disgusting. All right, guys, let's start wrapping up this show here. Great job today. Love the analysis. I think it's very important. One last look at the technical read there, Noah, just as we kind of get final thoughts and kind of wrap this whole thing. WA, probably not.
I'm going to get there eventually. I just got some serious fat
We'll
fingers
see.
right now.
Sure.
Yeah, I got there.
Yeah. Mark, just down here, 32.51. We've been selling here for the last hour or so, just kind of as the markets are fading lower, down 1.4%. It's not like we're in huge 4, 5, 6% down days here, but it is technical weakness right now. Any final thoughts for the team out there?
Listen, it's not a whole lot. Listen, if you've been watching the halftime show all week, you know my thoughts on this. I have no idea what's going to happen. And I said this on Monday. I don't know if tomorrow's going to be up 40 points or down 40 points on the SPY. I mean, It is like just really, really, really difficult chart that can go a lot of different ways. The only thing that worries me is, and I've talked about this a little earlier, is like, where's that sentiment spark? Because sentiment is spooked right now. Sentiment is spooked. And, that where's the headline that shifts it? Probably not coming. And with it not coming in the short term, you're going to have a good old fashioned technical support level hold, get tested again before you have any degree of confidence. And so this remains, just like it was last week, a 100% technical battle playing out on the charts.
Love it. Maddie, final thoughts?
Yeah, just as the market starts selling off a little bit deeper here today, just keep an eye on that 32.20 level. Keep an eye on that level in the short term. There's not a lot of support between the current break that we saw at 32.50 down to 32.20. So keep an eye on that 32.20. If that is violated, you could see 3,200 fairly quickly. So keep an eye on those levels at 32.20 on an intraday perspective. I'm in the process at this point of just updating support levels. Just updating support levels. 32.20 is kind of that level that I'm looking at. 3,200 would be the next step. Underneath 3,200 would be 3,130. Underneath 3,130 is right there at that 200-day moving average. And so, as of right now, you're walking down the stairs, guys. That's what the market's doing. It's walking down the stairs. And as long as it continually violates intraday support levels, you got to update those support levels on the downside. Right now, 32.20 is where I'm looking at.
Well, and it's kind of where the market was last week as well. You had a couple of little hesitation days trying to bring it back up, but then it started to weaken, and then we saw that down the stairs type of mentality, and that is a principle just in technical analysis. Noah, enjoy the Step System Mastermind group tonight. I know that's one of our favorites that we do each and every month, 8:30 p.m. Eastern. What are you going to be talking about tonight? Probably something with how to identify these bearish levels or whatnot. We're going
to be talking about bearish momentum, bearish activities. Things like portfolio hedges and stop losses. And then obviously I think there's opportunities out there for short selling. If we see some breaks of support, there's those pockets and those moving averages, and there'll be some downward momentum. And really, one of the nice things about the Step system is it does have a pretty solid set of rules for people to follow when it comes to bearish trading.
Yeah. That's right. That's right. Guys, if you're out there, you're a pro member, you've gone through the step system, make sure you join Noah at 8:30 p.m. Eastern. We'll have that webinar on site on the events page. But remember, put options with Tyler at 7 o'clock Eastern. We'll be going live here. Appreciate everybody out there. Hashtag Team Tackle. If you've not done it yet, before you bounce out, thumbs up. Let's get the analytics up. If you are brand new to our channel, subscribe, click the bell. We do this every day. The markets are live. We break down the analysis and give you guys some insight. And if you're looking for a trading community and finding a home and putting education before application, truly learning how to do this, there is a 15-day trial in the comments below every one of our YouTube videos, or you can just go to tackletrading.com. There's also the trial right on the front page in our homepage on our website as well. We'd love to have you guys come and join us as we put out all of our webinars, our content, and our courses. Guys, we're out for today. We'll see everybody tomorrow, same time, same station.